Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Precious metals are on the rise, which always spikes the interest of people predicting the future price of gold and silver. Now, let me put it this way. We don't have a crystal ball. We can't time travel, so they're all assumptions. They're all just an educated guess based on historical properties or the patterns that we've seen. Now, with that, a lot of people will try to tell you that gold's going to explode and silver is going to stay low or vice versa. And the best tool to see which metal is the better investment is the gold to silver ratio. Now, it's currently at 80 to 1. Meaning it takes 80 ounces of silver to equal 1 ounce of gold. Now, this article is talking about why the gold to silver ratio could return to 15 to 1. And that's showcasing if gold is $2,000 and the ratio is 15 to 1 right now, silver would be $133. $133. If gold moved up to $3,000, silver would be around $200. And if this ratio, which this was the historical average for a long period of time. It wasn't changed until the 30s when FDR changed it from 16 to 1 to 75 to 1. And there was only two other times since then, since the ratio has been even close to that. So, this is all basing everything off of circumstantial instances, right? Certain things, the stars have to align, certain things have to be in play for this to happen, and it's talking about how silver has to be seen as a monetary, or as a form of money again. Right now, it's seen strictly as an industrial metal, and there has to be a whole new spectrum, a whole new aspect coming into play, which is very plausible because the dollar is crashing. The dollar is becoming worthless. It's lost 98% of its purchasing power due to hyperinflation. A new monetary system has to be in place, and I definitely think you're going to enjoy this article. It definitely opens it will open your mind and see. It will really show the reality of our financial system, what could happen in the future with money, right? With our finances, with a new system in place. It's very interesting to to even try to fathom this thought. So, anyways, if you enjoyed this video, if you will please smash the like button. Let's see if this video can get 300 likes. Make sure you're subscribed because I do post daily videos. So for hundreds of years, prior to 1873, the gold to silver ratio stood relatively constant near 15 to 1. After 1873, silver was demonetized in favor of gold exclusively, and its value began to plummet relative to gold, reaching an all-time low of 131 to 1 in March. For the gold to silver ratio to return near 15 to 1, monetary demand for silver must return, as money is the strongest of all demands, since money is half of every transaction. The old monetary ratio was regained briefly twice in 1919 and in 1980, when consumer price inflation was near 20%. If confidence in the dollar collapses, which it is, and price inflation once again reaches those levels, which it's headed towards, that ratio could be reestablished, meaning silver could outpace gold by 5 times from here. So, take a look at the chart below from Statista breaking down silver demand for 2018. So, this is, I think it's millions of ounces, or whatever. So, jewelry, industrial, and jewelry and industrial, or the coinage, it makes up most of it, and that shows that silver is finally intertwined in the economy. It's an industrial metal. Gold, almost all of gold is just in coins and bars. Silver, being the most highly conductive metal for thermal conductivity and electricity, shows that it's used for so much more than just coinage. There's something glaringly missing in this chart. It's a kind of silver demand that used to exist but no longer does. If you can guess what's missing, then you intuitively understand why the gold to silver ratio could potentially fall all the way back down to around 15 to 1 and quickly. It is now at 83 to 1. It's actually at 80 to 1 now, down from an all-time high of 131 to 1 in March during this crash, or the pandemic. Monetary demand is missing. What's missing from the chart is monetary demand. Yes, there is a demand for silver in the form of coins and bars, but this is not monetary demand. This is investment demand. There's a big difference. investment demand is specifically speculative demand for silver for the ultimate purpose of increasing monetary reserves, those being dollars. Monetary demand for silver specifically is demand for silver for use in monetary transactions directly in exchange for goods and services. So trading it, like back in the day, that demand no longer exists because of Gresham's law. Gresham's law states that overvalued money will drive undervalued money out of circulation, and so the paper dollar, unconnected to silver for nearly 115 years now, has driven monetary demand for silver to zero. The dollar value of a single silver dollar today is $18.80. A silver dollar versus a paper dollar, which would you hoard, invest in, and which would you spend? The answer is obvious. Monetary demand for silver has been essentially zero since silver was completely demonetized in 1964. But the thing about monetary demand is that money being half of every single transaction in the entire world, monetary demand is, by its very nature, the most extreme of any demand possible. Fiat currencies fulfill virtually 100% of monetary demand, leaving none over whatsoever for silver. But what about gold? Insofar as central banks do hold gold as a reserve for their fiat currencies, one could argue that monetary demand for gold still exists in some halfway centralized form. This, however, is an esoteric issue I don't want to get too deep into here. So what happens to silver if the dollar falls? In two of my previous articles, I made these 2 points. One, that the US dollar is not money, but rather a money substitute. It only has value now as money substitute because it can still buy some amount of real money in the present, which is gold, right? Fiat currency doesn't have real value. It's not backed by anything anymore. It used to be backed by gold and silver, but now it's not backed by anything. Gold and silver cannot be created nor destroyed, has been seen as a monetary form of exchange for over 5,000 years. The dollar's a newborn baby. My point is that the gold is money now, and that gold was actually being exchanged in any dollar transaction, the dollar being only an ever more diluted stand-in for it. My conclusion was that if and when the dollars can no longer buy any amount of gold, the value of the dollar falls to zero and hyperinflation ensues. Number 2, in another article, I said that precise definition of hyperinflation for any paper currency is this. Hyperinflation is the result of demand to hold cash balances among the public falling to zero. So, these 2 points in mind, there are 2 possible outcomes, generally speaking, in the event that gold's dollar value approaches infinitely, or stated inversely, that the dollar's gold value approaches zero. The first possibility is that the Federal Reserve stops printing dollars completely and makes the dollar directly convertible into gold again, physically at a fixed exchange rate using its reserves at Fort Knox. The second possibility is that the Fed Treasury sells all its gold in an attempt to stabilize the dollar's value against it, the result being that the dollar becomes completely and utterly worthless. In my opinion, the implications for the gold to silver ratio are the same. Either way, here I will try to explain why in a logical progression. First of all, it is important to recognize that central banks do not have any significant reserves of silver. It's only gold. This has been true in the United States since around 1968. Below is a chart of U.S. Treasury silver stocks from the World Silver Survey 1950 to 1990. So it's literally zero. Given that central banks have no silver backing their currencies at all, that means the monetary value of silver, not the investment value, but the monetary value is currently unknown. What we do know is that for at least 300 years, from 1693 up until the Coinage Act of 1873, which demonetized silver and put the dollar on a pure gold standard, the gold to silver ratio held pretty steady between 14 to 16 to 1. So, the Coinage Act of 1873 officially broke the dollar's link to silver. This move, of course, shot a spear through monetary demand for silver, and silver's value relative to gold began steadily to decline. There were only 2 times since when silver approached its old monetary valuation relative to gold. This was in 1919, end of World War peaking in 1919, and the inflationary years of 1979 to 1980, this is when silver was $50. In both cases, CPI inflation rate was approaching 20% annually. So, we know from historical precedent 2 things. First, when silver was used as money directly, the ratio was about 15 to 1 on a very consistent basis. Second, when inflation comes severe, as it did in 1918, 1919, and 1979 to 80, this old ratio was briefly reestablished twice. So, it's talking about, and here it goes into to show the correlation between inflation and what happens to gold and silver, or the ratio. So I want to throw in a side point as well, because they're talking about the ratio being 15 to 1, and it's interesting because how much gold to silver there is in the Earth's crust is around 16 to 1. It comes out of the ground roughly 8 to 1, so you would think the price should be around 8 to 1, but it's not. It's nowhere near that. And it's actually probably lower than that, because right now miners are focusing more on gold since it's more profitable. They're abandoning silver mines. So silver production is being cut back. Gold is the main focus. Silver is found as byproduct. So not much silver is being produced. And a lot of it's lost in technology, not to be recirculated. So there's going to be a diminishing supply of silver with a growing demand. So silver demand, logically speaking, let's go beyond chartistry for a moment and analyze this from a more human action logical perspective. If gold's value in dollars is undefined, gold is now money directly without a dollar intermediary. And this is true. Think about this. Gold's value is not the spot price attached to that 1 ounce, but it's the 1 ounce inside of it. No matter who says what that 1 ounce coin is worth it's irrelevant, because the 1 ounce coin's value is not whatever that person's telling you the coin, the price of that coin is, but the metal content inside of it. So it goes into talking about, people stacking gold and silver, junk silver. Silver's primary purpose in such an environment would be a medium for establishing the monetary value for gold relative to other goods and services, trading, bartering. And then it goes into global mine production, which I was kind of just talking about, production, all that. So let's go down here. So whether the Fed decides to stop printing and back the dollar with gold, or whether it tries to sell gold in an ill-advised effort to preserve the dollar's purchasing power, does not matter as far as the ratio is concerned, in my opinion. In either case, silver would return as a monetary metal as it has been for thousands of years, much closer to historic monetary ratio relative to gold than it is now. So whatever happens, they're saying, those guys saying, it is looking like silver has a place in the future, in a very strong place, a ratio that's much closer to gold than we think. Now, people say the ratio historically, this isn't an opinion, this is a fact. Recently, the average ratio is around 60 to 1, but people say it could still go a lot lower. This is the first time I've heard someone, break down and why it could be so, this low. This is a very extreme low. I'm not going to try to, minimalize it, but giving my opinion, realistically, this would take a very long time. And like I said in the beginning of the video, this is based off of circumstantial, incidences, and the stars would have to align for all this to happen. But something is going to happen, whether we like it or not, whether you like it or not, whether you believe it or not. Times are changing. Our financial system is changing. Something has to change. Right? We cannot, our system cannot keep running like this. Something will change. Whether it's going back to the gold standard, which Donald Trump jokingly mentioned, which is not going to happen. We're too deep in a hole to fix this problem. There has to be something completely different. Some speculated it was going to be cryptocurrency since it was decentralized. It was like everyone speaking the same language, but from a monetary form. Some speculated, it's going to be gold and silver again. I think it's going to be something digital, something close to cryptocurrency, but not cryptocurrency, because there's way too many flaws with Bitcoin, right? Way too many flaws. And you guys know, I've invested into Bitcoin myself, so this is an unbiased point. It's just there's too many flaws with it. If they would have just focused on Bitcoin and not all these other altcoins, possibly, but it's just ruined now. So I don't know what's going to be, but all I know is gold and silver are only going to go up from here regardless of what happens, and that's the whole point of this video. I'm going to wrap this video up here. Thanks for tuning in. Make sure to smash the like button. Subscribe if you're new. This was Silver Slayer. I'll see you guys soon. Peace.